money is leaving the financial sector and going into the real economy. Now, is that a good thing for certain asset classes? For sure. It's very good for commodities. I mean, that's backing this whole commodity story. It's probably good for earnings in a certain number of areas, but it isn't necessarily good for price formation in financial markets. In other words, the E may be going up, but the P multiple may be coming down. And that's the critical thing to kind of understand in this whole equation. It's often hard to see why stocks don't do well when earnings are good. But what I'm saying is we're now at the phase where Main Street is getting the benefits after Wall Street's had 3 or 4 years of excellent gains. And it's that transition, which is always an awkward one. And that's why I'm saying you've got to think more about real assets than maybe financial assets.
As you know, money can only be in one place at a time. You have the financial economy, the real economy. I think sometimes it might feel counterintuitive because a lot of folks might assume that a strong economy, that strong real economy would be good for markets, but that's not necessarily the case, is it?
Well, it's not. I mean, I think one of the errors that investors often make is to basically say that the security prices always respond to fundamentals. Now, that may be the case in certain times, but you've also got to accept the fact that capital often gets there first. Money moves quickly. And our view is that it's money that moves markets. Economics is downstream of markets, and geopolitics happens to be downstream of economics. So you've got this sort of sequence, and it's money working out where the money flow is that's really the critical thing. And the 2 points about the money flow is that one is it's driven by central banks or policymakers, and that can be leveraged up by the private sector. But the other is that liquidity is then drained into a real economy that begins to pick up. And this is sequential. So the cycle in liquidity precedes the cycle in the real economy. And our view is that as the liquidity cycle is dropping off now, that is really a signal that the real economy is beginning to pick up. So our view is that the underlying momentum in the US economy is pretty good. Parche what you're getting in the Iran tensions and the oil markets, which may well derail it or cause a problem, but the underlying momentum still seems to be good in the economy.